Welcome to Exchange Rates UK TV. It is the 2nd of August, 2021, 7:40 p.m. Eastern Standard Time. Taking a look at the monthly chart now because we are into a new month, so I think it's really important to take a look at what we've got going on here. So, there is a pretty big deal with actually the monthly chart. Yes, but it's so new that there's not really enough data to go off of on the monthly, so I've gone to the 3-week chart. Could go to the 2-week, but 3-week is closer and better than that. I think there's enough data here. So if you watched my Cardano video or if you read the article for today already, you'll note that I talked about some a condition known as hidden bullish divergence. We've talked a lot about hidden bearish divergence that's been present on the daily chart for a while on a lot of these cryptos, but a lot of them have nullified that condition. On the daily chart, at least, there's new bearish divergence showing up on the weekly charts, but for right now, looking at the 3-week chart, this is interesting because when you look at the current low of Polygon, MATIC, in the composite index, related to where we are up here, all right? And then when you look at the low back here, they're pretty even. I think where the 3-week candle at the 26th of October 2020 is slightly above or even with where we're currently at. Actually, this is at 30.27. This was at 29.21. So this one's slightly higher. But regardless, I mean, it's pretty damn close. The point is that there's a huge discrepancy on the candlesticks compared to the structure here. So this looks like a flat line across. If I was to draw a trend line from this point on the composite index to where we are now, that's what it would look like. And I'll turn that black there. Okay, if I were to do the same thing with the close of this candle to the close of July, or even where we're currently at, that's what it would look like. So this is known as hidden bullish divergence, all right? And what does hidden bullish divergence mean? Very simply put, hidden bullish divergence is a warning that, if hidden bullish divergence shows up, the first thing you want to know is, okay, what is the overall trend? The overall trend is bullish, yes. So hidden bullish divergence is a warning that the current downside move is likely to end, and that we're likely to see prices begin to move up and resume that prior uptrend. Now, Ellioticians are probably looking at this and going, oh my gosh, that means we are just going to start a third leg higher. That very well could be. This is a logarithmic chart. So, depending on the value you want to use, this could be let's just assume that we've completed a third wave. Okay? That means there's still another wave to go. There's a fifth wave. Let's just do this. Let's just look at this like this. Here's an impulse wave. We got 1, 2, and let's just say that 3's up there. And 4 terminated down here, and 5 is up there somewhere. Okay, let's just say that that's that current impulse wave. Whereas I look at this like here would be 3. If we were starting off with the first leg up here, 3 would be 1. Anyways, let's not confuse everybody. Now what I want to do is get a projection of where price would go. All right, how high would MATIC go? Well, I need to get first identify the swing. So I'm going to start with this low to that high to our swing low. And what I'm going to use there is a fib extension. There we go. And there we go. Now, let's conservatively say that, the fifth wave is going to end at the 50% extension or even the 618 extension. From the present value, that is still, it's not quite 8 times the present value, and it's not quite 15 times the present value, but it's within that realm. Okay, $8.16 to $15. That's the target range. If this is the the fifth wave. If it's the third wave, it could be much higher. Now, I'm not suggesting that it would go that high. And I've been in cryptocurrencies enough that I've said that many times, and then things inevitably end up going that high. But in the present, it seems ridiculous. Like Bitcoin in 2014. I mean, thinking of it at $20,000 just seemed ridiculous. It just seemed like a valuation that was not attainable. This is, if you're talking about trillions of dollars still waiting to enter the market, and Polygon is definitely one of those cryptocurrencies that has a use case that has kind of a control over its market and what it's focusing on. It can definitely move that high. And so this is just kind of a projection of where it could go. And I'm not saying it'll go there next month or in 3 months or 4 months or in 6 months, but that is a kind of a general range within this current swing that we could see it occur. So, and if this is leg 3 actually, so if this was essentially this instead. It's just $107. Is that realistic? Probably not. I mean, let me just I'm going to pause this video and just pull this up real quick. So there are 6,434,735,794. Okay. There are 6,434,000,000 MATIC out there. Times 107. That's a market cap of 688 billion. So that is pretty high. That's higher than Ethereum. It's double what Ethereum, more than double what Ethereum currently is, and just below Bitcoin's current market cap. But here's the deal: if there's trillions in the market of professional money that's not in here yet, that's a very fair valuation if you want to do it relative to the current market cap values. Yeah, that's it's very, very likely that it could get there. So anyways, I'm going to leave it there. And we'll touch again on this later. So tomorrow we'll look at something more intra-week and weekly, look at some trade ideas. But for right now, I just kind of wanted to touch a little bit on Polygon and, looking at projections of where it could go, and these are using realistic levels, but not maybe there, maybe more like here or here, just to keep things real. That does it for me. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe.